my opinion, we're in a monetary crisis that's going to change the monetary system, at the end of the decade, change the political system. There's going to be tremendous social unrest. So the stakes have never been higher. How do you survive this period? How do you personally survive? The government is not going to bail you out. That would be one of the most fundamental mistakes anyone could make, is to think, well, the government will rescue me here.
We're joined today by Michael Campbell. He is the host of the Michael Campbell's MoneyTalks show. He's had a long career working in the investment industry and also in the media industry, and he's made a series of very important correct calls, and we'll be getting his outlook on the economy today. Michael, welcome to the show. Pleased and honored to host you. Thank you.
It's my pleasure. And by the way, that's a lovely way of saying he's an old guy. So thanks.
It's not about the age. It's about the mileage. But you have run a long way. Tell us about your career. Tell us about how you ended up you were telling me you started off in the brokerage industry, Merrill Lynch, in Vancouver, where we're both based right now. Well, you're on the island, but I'm in Vancouver. And then you came all the way to the media side. How did that transition take place? And give us some career highlights.
Well, yeah, I started with Merrill Lynch. It was difficult at that time, though, because I'm talking now in the 70s. They didn't really care about Canada. So if there was a big new issue coming out, you couldn't access it. It was going to go somewhere else. So I went from there to a local Canadian firm, a bigger Canadian firm after that. Where I got involved with finances, I was asked to do a little piece on TV, and it seemed to go well. They thought it went well. I also was teaching at the University of British Columbia on corporate finance. It was just one of their one-off sort of sessions that they do. And that moved into finance and personal investing, all of that kind of stuff. So I did just really a boatload of those kinds of things. And and that's where the media side of it came. And it's been over 40 years doing that on television and doing that on radio. But I mean, my keen interest is in the financial markets, which I stayed in, working as a broker for a number of years. And really, that's it.
You made a number of correct calls. You told me offline you called Brexit before it happened. You called Trump's election back when he made president a few years back. What's your bold outlook this year, a paradigm shift, if you will?
Well, both of those calls came out of an understanding, or at least my bet was, all we're looking at is confidence in the whole economy, but also, society in general. And I was watching this declining confidence in government. We call it now that people are angry or there's divisions and all of that. But this was evident going back a number of years that this was really intensifying. So I just looked at Brexit, for example, and thought, no, they're not getting this right. There is a huge backlash against the establishment. Brexit's going to go through. Felt the same way about Trump. And you recall when Trump was running in November 2016, there was literally not a major outlet who thought he'd win. And I thought, because they don't have this major overlay. Now, whether he won or not, I said he would, I meant on the air. But the real thing was this buildup of anti-establishment sentiment, which now is a lot more obvious, but it's certainly there. And so I said, yeah, I think Trump will win this, and that'll be the basis of it.
Well, how do you think his politics and presidency affected the investment landscape?
Well, again, if you recall, all the lead up to Trump being elected in November 2016 was what a disaster it would be. And I think after the election results were in, it was clear he was going to win on the night of the election. And there was just a little move down. And from that moment on, there was a massive move up, in the market. That was the sort of the base of the next leg. So, we got to smile at that one, at least, because the anti-Trump sentiment was so great that people lost their perspective. It wasn't analytical. It was an emotional reaction to him.
I remember during his presidency, whenever we had blips in the market, a lot of that had to do with announcements on tariffs with China, protectionist measures. Every time that escalated, the markets reacted negatively, and for good reason. Do you think protectionist measures will continue to remain in place going forward?
Well, here's an interesting one. You did a show a short while ago, a brilliant show, and you had Arthur Laffer on and you had Steve Hanke on. And I thought it was a wonderful show. I encourage people to go back and listen to these two absolute legends, in the world of economics. But it was really interesting to hear Professor Laffer say, you know what? Trump was all show. He was trying to force them into a freer trade kind of thing that worked politically on the short term, as tariffs usually do, but of course was really damaging on the longer term. But he said it was a ruse to try and force these trading partners to go with free trade. So I'm not sure where he stands, because I certainly have tremendous respect for Arthur Laffer, but that was kind of news. But the bottom line is those tariffs hurt the American public. I mean, every tariff, look what they've just done in the US with raising the cost of solar panels from China by 100%, which is kind of laughable in light of their green agenda being in so many other areas, because that is negative for the green agenda. Because, hey, shouldn't we adopt anything that's cheap and quick and let's go? But at any rate, it'll be interesting to see what the true flavor is. We did get a free trade agreement when Trump was in the office, with Canada and Mexico. Been a huge boom. I mean, it is for both countries, but boy, Mexico, wow. You're seeing a lot of companies relocate to Mexico or start up something in Mexico because they get access to the US market, through the free trade. So, I mean, Trump's a wild card. I mean, it's very difficult to say that this man is a predictable man. But I think it's also, I mean, his pro-business stance for the US market would be very positive, but maybe not globally. That reflects on positivity, like tariffs.
Before we continue with the interview, I want to spend a minute to talk about another great resource for investors, Doug Casey's Crisis Investing newsletter. Now, Doug Casey is the best-selling author of several books, including the New York Times best-selling book, Crisis Investing. He's had a proven track record of investing in the commodities and resource spaces, and he's appeared several times on my show. He's a fan favorite of the show, so I'm happy he's decided to sponsor today's message. The Crisis Investing newsletter breaks down Doug's views on global affairs, current trends, and investment opportunities of often underreported assets. For example, a recent issue covered natural gas, and it starts like this: the cheapest and most intriguing asset out there today with the highest potential for growth, natural gas. Its potential for explosive growth has never been greater. If you're intrigued, you can go to Crisis Investing to learn more and find out what stocks Doug personally owns himself. Now, Doug has agreed to give a 20% discount to viewers of the David Lynn Report. So if you'd like to find out how Doug is investing and learn more about his thoughts, go to crisisinvesting.com/David in the link down below, or scan the QR code here to get your 20% discount today. Well, the election is a couple months away. I've heard the opinion that unless the U.S. goes into a recession before November, or on paper, there's a technical recession, it's very difficult to kick out an incumbent president. Mm-hmm. Is that true?
Well, yeah, I mean, I think it's a degree of, if things are good, definitely that gets very different. People don't vote for change. But we're watching a dynamic right now. I was looking, this sounds absurd, but I was looking at fast food pricing since 2019. Now, I may not be a big time fast food eater, but I know a lot of people are. Clearly, look at their sales numbers. Well, the inflation in some of their basic products, whether it's a burger, whether it's a fry, has been huge. I think that's really the backdrop, is there's a huge percentage of people who are having a problem with the cost of living. Their priority is not climate change. Their priority is not many of the things that government talks about, whether you're talking about from Canada, whether you're talking about the Democratic administration in the US. People aren't talking about that. And I think that's underestimated. So I don't think the quality of the economy is going to be strong. I personally think whether it's a technical recession or not is not particularly relevant. Like, if somebody's having trouble making ends meet and I go, no, it wasn't a recession because we had growth of 0.25%. They don't care. They don't care about that. So I'm saying the cost of living is a bigger issue. The challenges for refinancing some of the private debt, is a challenge for people. So I think it's going to be a negative backdrop for the Biden administration. If you wanted me to put $5 on the table, I think it would be recessionary by then.
Okay, I want to come back to that. I want to come back to your economic outlook and drill a little bit deeper. But let's talk about this threat of war you were telling me offline. Where I was going with the tariffs discussion is we get more tariffs with countries like China when relations sour. And so I want to know what you think is going to happen, what the direction of Sino-U.S. relations or just U.S. relations with other countries into the next presidency. Are things going to get better, do you think, or worse? And if so, is the market pricing in a threat of a big war with any of the U.S. peers?
I think it's a mistake not to at least address the global geopolitical challenges. I mean, you can have your approach, and many people, of course, do, professionals do, but to ignore the potential for change that would take place with war. One of the things, it's inflationary. War is always inflationary. They're pumping, look at how much money the States is pumping in to whether it's Ukraine. Oh, here's another bill for Ukraine. It's 77 trillion. Here's another bill for Israel. This is always inflationary. You're creating a ton of money there. So that's something that at least has to be acknowledged. And I think the geopolitical situation is getting far worse. We're not anywhere signs of any kind of agreement really in Gaza, but it's beyond. As you said, China just ran its sort of naval exercises that they said was a precursor for a nuclear attack. Let's pay attention. And Xi Jinping hasn't changed his statements about Taiwan. So that's out there. I'm just saying, when you get war, you get geopolitical, the impact on so many things. Just one example, it's just one of the ways I look at it, is what happens to money? Well, money flows to safety. That's, I think, one of the biggest benefits for the US dollar. A lot of talk about the US dollars. There should be, key currency, reserve currency, commodities traded in US dollars. Well, I can tell you, geopolitical problems and war are good for the US dollar. If you're in Europe and you're worried about threats from Russia, you move money into the States. There's other reasons too, but the same with the Middle East challenges. And literally, as you say, if it was a Chinese aggression in Taiwan, well, there's just so many implications. That's why I'm surprised I'm not hearing that at least mentioned in a lot of analysis when they look at forecasting what's going forward.
You've been bullish on the US dollar since 2014. Yeah. Right? Has the environment for the US dollar being bullish then, has that differed from the environment today? In other words, the rationale for holding the dollar 10 years ago, is that still applicable today or not so much?
Well, first of all, a lot of people are very concerned. We had Jerome Powell, I think it was December, say the U.S. debt's not sustainable, but neither is the debt in Europe, neither is the debt in Canada. It's a comparative thing when we ask about the U.S. dollar. So comparing to the loonie, I'd prefer the U.S. dollar nonstop. Aussie, yep. Euro, yep. It's where else are you going to do if you're talking only currencies? Now, if we're talking alternatives for a store of value, which I still think is the biggest challenge for individuals, where are you going to put your money that the purchasing power is being maintained? Well, clearly we have, at least central banks, but we still have individuals liking gold. I think that's a impetus for Bitcoin and other cryptos. The issue's out there, but I think vis-a-vis other currencies, that's, I know about de-dollarization. I think the Chinese are showing us it's starting with some of their numbers, but who wants to do it? Who wants the reserve currency to be to the yuan? I don't know anyone who does. India's decades away from being able to pull that off. That's why I was so little skeptical of the sort of the BRIC notion that they're going to replace the US dollar. I just think that's a long road. I think the US, as I say, so it depends what we're comparing it with.
It's interesting all throughout the last 2 decades. I'm looking at the DXY long-term chart. Ever since 9/11, the US dollar has been relatively stable. And actually, it bottomed in 2007 and it's been on an upward trend ever since then. Are you surprised that the wars in the Middle East, the ongoing wars ever since 9/11, haven't really put the dollar in the doghouse?
No, I think it's because, again, it's relative to other currencies, and U.S. is seen as safer. The threats aren't to the U.S. mainland directly. Apologies to 9/11 for a second on that. But no, and it's very consistent. When we have problems in other parts of the world, geopolitical problems, serious geopolitical problems, money has gravitated to the Dow Jones first. And now, of course, the tech is helping out a lot, but gravitated to the US dollar. So no, I'm not surprised. In fact, that's what I would expect. And it's funny, turn that around, David. Somebody was saying to me, they thought that it's the end of the US dollar. I said, I'm first of all, I have a date for that. I think it's coming at the end of the decade. But I said, you're telling me then there's no geopolitical problems. If you think the dollar's going down significantly against these other currencies, you can't ignore that in geopolitical problems, the U.S. benefits. And I think that's what we've seen. Every one of these sort of dips in the U.S. dollar and the pronouncements over the last 3 years, that's kind of the end of the U.S. dollar. Then we get another flare up, and there's other reasons, but another flare up of geopolitical, presto, money flows to the U.S.
Yeah, it seems to have moved in cycles. It peaked in the early 80s, as you know, and then bottomed in the early 90s. peaked around 2001 after the tech bubble, after 9/11, and collapsed, troughed around 2007, and now it's on an upward trend. But
You
you're
know what?
saying this
Yeah.
this 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 is going to stop at the end of the decade, this bull run for the
Well,
dollar?
yeah, I think it does. I think one of the things I've been saying on Money Talks since about 2020, I said in 2022 it'll get obvious we got a monetary crisis. And I think that's, again, I think it's pretty darn obvious. But let me come back to just one thing about the US dollar. You went back, I hadn't thought about what year it is. Let's go back to your 2007. Your alternatives of the euro and the yen and the British pound, which were the only currencies of size to absorb the kind of money we're talking about. Like you could never have the Canadian dollar, the Aussie, or New Zealand, as your reserve currency. It's just not enough money. It's, the global trading markets are minor with them. So you had these four choices. Think of how that choice changed. A lot of people may not like what's going on in the US, but my God, I hope they dislike what's going on with the yen more, or the euro more, or the UK pound more. So the US, a little bit by default, stays in that primary position.
All throughout the last couple of decades, though, the U.S. remained a clear
Mm-hmm.
lead geopolitically, economically, and militarily over the other countries. In other words, it
Yeah,
retained its hegemony that it's kept since the fall of the Berlin Wall. First of all, two-part question: do you think that will remain?
I
Right.
think
That and number
no.
two, if it doesn't, if the U.S. starts losing its hegemony to, let's say, China or the BRICS countries as a bloc, will the dollar still remain a safe haven?
Yeah, I'm first of all, I do. It's a good question because I do make a division: the dollar as an exchange mechanism, the dollar as a store of wealth. So the store of wealth aspect of the dollar is clearly starting to erode. That's all I'm saying. It's just starting. It's inkling. And when you look at the central bank buying, pushing up the gold to 2,400 with a good significant chunk coming from central banks outside of the U.S. I think that's has some significance. That's something I would go, that's noteworthy. Um, but again, if you look at it as a mechanism of just trade, I think it's even farther away. We've got a lot of work to do, but keep in mind how fast things are changing. But yeah, I would think that's much more toward the end of the decade.
Going back to the economy now, you're projecting, I guess, some sort of slowdown or recession by the end of the year. Can you expand on why that's going to happen?
I'll give you the why and why it's important, both.
Sure. Yeah.
Okay, so first, let me start with the why it's important, because the overlay for all of this is sovereign debt. Is the debt problem? You've got to have a. You cannot afford a recession and losing and watching your government receipts go down in an environment with record sovereign debt, and those interest rates aren't going down. So it gets worse. I mean, the debt situation is worse because real interest rates, are still up there. So I think that's why they're concerned. I mean, you look at the debt to GDP ratio, and in the States, for example, you take all the government receipts and you can barely pay interest in the military and entitlements, that kind of thing. So it's very significant. The slowdown, though, the States, again, is very different. It's stronger. I mean, Canada's much weaker as an example. Obviously, Europe is weaker. Many of the developing countries, again, there's such a variety. I've got to be careful there. It's not a generalization, but so the U.S. economy is clearly better than those guys. If you had a choice, you'd go, I'm not going Japan, I'm going U.S. For economics or for the economic growth. But still, you're seeing a slowdown. Again, I think this is the problem. It's a really interesting discussion whether we'll get stagflation instead, where inflation rates above the economic growth. Clearly, economic growth is slowing down. Again, though, two things come to mind immediately for me. It is such a big economy and so many different sectors. So we can choose a sector and talk about how it's doing, choose another sector to talk about his doing. I'd also divide out the government sector from the private sector, in looking at what's coming. Public sector's got so much money pumped into it, thanks to the Biden administration's, whatever, the Environmental Protection Act. They're just a nonstop, these massive amounts of money getting pumped into the system, which, by the way, Jerome Powell kind of mentioned was working counter to what he was trying to do. He wanted inflation down. The government's fiscal policy was pushing it up. So broad generalizations are a little bit dangerous, especially in the States where geographically also it's very different, Like, I don't think Florida is going to go into recession, for an example, because so many people are pouring into it from other parts of the States. So I don't think it's particularly relevant other than the economy slowing down in the US.
Since you brought up the other countries, I've talked to an economist, and he noted that the other G7 countries have all, at some point in the last couple of years, moved into a technical recession.
Yes.
The one glaring exception is the U.S. leading the pack, as you said. What defines or what has contributed to this divergence, you think?
Well, amazing amounts of money are flushed in the States. If I asked you which is the most entrepreneurial culture, would you choose Canada? Would you choose Germany? Look what Germany's done thanks to their climate policy and their energy related outcomes from that or consequences. So which is the most entrepreneurial, innovative, country? Well, it's the US, and so if you can divide, forget the public sector. I've been advising this for so many years. It wasn't just the US dollar. I told Canadians, invest in the US predominantly. And it's predominantly on that, invest in the US tech sector. Why? Because look at the innovation that comes out of there. I mean, nobody runs around and saying, gee, look at that innovative Europe. I'm not saying there's not something that comes out, but it's not an innovative culture. In Canada, thanks to government regulation, taxation, Canada's not been a hotbed of innovation either. There are exceptions, but look at the States and look at the States, how that continues. I got quoted regularly going back several years when I said, you know what, before this is ended, all companies are going to be tech companies. Mm-hmm. And then that sort of evolved recently to all companies are going to be AI companies. You can't. So
there's your bold prediction I asked you for the beginning of the interview. There we go.
Yeah. I think the dramatic changes. In fact, the most positive thing when people ask me about the future for our younger generation.
Yeah.
Well, it's not because of government action. I mean, it's horrendous. It's not because of, all sorts of, the unfunded liabilities in the States and Canada and Europe, obviously the debt hangover that they're paying, interest on, all of that. No, their biggest hope is technological change, technological advancement.
Given your outlook on the economy and everything we discussed so far, how are you managing your money? You told me offline you're also an investor yourself.
Yes. As I said, I've been saying again this since in 2020 in February, we ran a major conference called the Coming Commodity Boom.
Yes.
And that was informed. Sorry, I have to digress just for a second.
Okay.
He's a boring guy. Yeah, I am. September 16th, 2019, we got a strong glimpse. I called it the most important day in the last decade. Why? Because the overnight repo market stopped working. People were not willing to lend money on very short term. So the interest rates, and this is key to understand when people have interest rate forecasts, you've got the Federal Reserve, but you know what? They don't set the bond market rates. The public's confidence does. So that night, you got the annualized overnight rate went from 2% to 10%. Why? Because I needed the money. And I said, well, you won't lend it to me at 2? How about if you lend it to me at 4? Nope. How about 6? Nope. How about 8? Nope. How about 10? Okay, I'll lend you some money at a 10% annualized rate. Of course, we couldn't have that happen. So that's when the Federal Reserve stepped in. It was right then on that basis. The credit market had collapsed. And so the Federal Reserve, and then we got a follow-up during the pandemic. The incredible activity of the central banks, still so active in Japan right now. The whole idea is that people weren't prepared to lend money. When it came to the pandemic, it was, well, I don't know what's going to happen. Is this company going to be around to actually pay me back if I lend them money? Again, now there's a lot of ways of analyzing the markets. That is certainly the one for me. It comes back to confidence. And the biggest scare I have is, the markets are, am I willing to lend you the money at what rate? Are you willing to buy at what rate? And sorry, this is typical of me. I go on and on, so forgive me. But we got another message. Look at the UK pension crisis. It came, they needed to liquidate their bond holdings. Why? Nobody wanted a 1% bond. That's what they had negative rates, of course, but let's go as a 1% when I can get, in that case, 3 or 4%. I'm not going to buy that. Well, what about how far do I have to discount the price of that bond to get you to do it? Well, the losses were going to be huge. So the Bank of England stepped in and said, I think it was 65 billion pounds in about an hour. Okay, but let's go to the Silicon Valley Bank. What was that really about? I mean, again, I'm simplifying some very complex things, but the bottom line is they had nothing they could liquidate. You know, they had taken their money, put it into bonds. The bonds were low rate. Nobody wanted those low rate bonds. They didn't want them at Republic Bank. Again, that's the biggest danger is, and I'm in Canada today. Biggest problem in Canada, not the same in the States, but most mortgages, like 90% plus, are 5-year mortgages. So people who took out mortgages in 2019, 2020, 2021, they're all coming for renewal. That's a killer. You can't have paid 1.6 or 1.5 or less.
Well, that's it. Yeah. How significant is refinancing risk right now, not just for the corporates, but also for consumers?
Yeah, both directions, as you allude to there, as you intimate. Absolutely. It's a huge thing because people aren't going to, the last choice is defaulting on your mortgage. So you stop spending elsewhere. But it's a really simple, but it's a fact. I can't have paid $2,000 a month for my mortgage, and now it goes to $3,000 a month. That thousand comes from somewhere, and
it's a more significant risk in Canada, is it
yes,
not? Because in Canada, where we are, most people have variables, and I've
yeah,
know many examples from my personal life of people's mortgage payments just going doubling in the last
yes.
year and a half. In the
I mean,
U.S.,
yeah.
yeah, more of a fixed rate culture there. Yeah.
Well, especially and it's interesting why it is though. But you've got 30-year mortgages, by far the most popular, like 90% of
Yeah.
Americans. So this abrupt change for people on their mortgage hasn't had the same impact, although personal consumer debt is getting impacted now. We're starting to see some numbers. But here's an interesting reason why, going back to what I'd said a moment ago. Nobody wants Canadian government bonds as security that go 10 years, let alone 20, let alone 30. I talked to the parliamentary budget officer, independent, like the congressional budget office, parliamentary budget officer, and I asked him in November of 2020, why isn't the government issuing 20-year bonds, taking advantage of this? He said, because there's no buyers. And back to my bigger point, that's when it really hits the fan, when people are hesitant to lend. That's why the Bank of Japan right now is in so heavily to support their market, because the public is going to say, well, we got inflation. I know it's low compared to ours, but we got inflation at 2%. I'm not lending you money at 1%, guaranteed losing money. So the Bank of Japan's had to dip into, they're a little different because they dip into their savings at this point, but it adds to fragility of the system. Like this, that's why I come back to confidence underlines what you're going to get for your currency, underlines whether people are willing to invest in you. And we understand that, though, because if I came to you and I said, you know what, David, I've just heard rumors about the bank that you're in, you don't wait, you get your money out of it. Your confidence, our confidence, is the foundation of the financial system. And I'm just saying, I think we're in a period, you've got to have your time frame. Short term, yeah, I think maybe you can get into bonds on a short term basis. Why? Because if interest rates drop, then your bond price goes up. Long term, not at all. I just think the risk of government bonds due to either inflation or interest rates getting out of control is something I worry about.
Well, the U.S. 10-year has been rising steadily. It's at 4.46%. Do you think it'll retrace 5%?
Yeah, if I had to bet, I would. Again, on a big picture. It's interesting, though. I have no faith that governments are going to fix this problem. They haven't in Europe. They haven't shown any sign in the States. They haven't shown any sign in Canada. They're not going to in China. So I focus on, how do you survive this period? How do you personally survive? The government is not going to bail you out. That would be one of the most fundamental mistakes anyone could make, is to think, well, the government will rescue me here. I mean, their track record of performance is abysmal, first of all. But secondly, I just think that endangers your own personal financial situation. So my thing to individuals is, you've got to protect yourself. I think fundamentally the response of governments is going to create more money, in conjunction with central banks, of course, but create more money. That's going to erode the purchasing power. That's what we've been living. So far, I'd rather be an American with US dollars but I say that whole paper thing comes to an end. So Bitcoiners will love me on that statement because that's their worry. But yeah, I that's what I see is the longer term major challenge is that the purchasing power of your currency.
So that is the thing we have to protect ourselves against, the
Totally.
erosion of our purchasing power with fiat money.
Yeah.
Okay, so let's go back to commodities. You said you like commodities. How do the commodity sector, or how does that sector fit into your thesis about protecting our wealth?
I'll start with a simple thing I always present people with is okay, I'm going to give you a pile of these paper dollars. I don't even care what country, and I'll give you commodities like oil, copper because renewables are going to have just an explosive demand for copper. Um, I'll give you gold, I'll give you silver, I'll give you uranium. Which pile do you want? They started at $10,000 worth on today. We're going to look in 5 years. Which one do you think is going to be better for you? I don't know how many people would actually choose the dollars. They intuitively understand that their money buys less than it did a year ago, let alone 5 years ago. So, yes, on the energy side, look, we have underinvested in energy. We found out the hard way, at least Europe gave us a demonstration, the necessity of energy in our daily lives to maintain our standard of living. So, then I think that, and I've been saying this since you've had Peter Grandich on your show. And Peter and I were saying this in February of 2021. Hey, you might want to start just putting some uranium away, at this point. Sprott Uranium Fund. And by the way, I liked Cameco because when money starts moving, you go to the blue chip. But I also warn people with uranium, you have to know what contracts they've signed. They may have signed a 20-year contract at a specific uranium price. So the rise in uranium prices doesn't help them. So I always want to check that first when I'm going to the stock side, but I still like uranium because it was, as I said, sorry, I'm rambling here, but very quickly, I have no trust in the government to wise up to the fact that renewables are impractical. They haven't shown me that yet. So they were going to push through. That's why I ran the conference in February 2020, that the coming commodity boom. I recognized they were going to push renewables, whether it made sense or not. We didn't have the materials available, whether they wanted to or not. We'd underinvested. It would be a supply problem there. A great example of where raising interest rates has, the prices are going to go up. Raising rates has no impact whatsoever. It makes it worse. So on the energy side, I still liked oil. I liked uranium. And now I'm getting really interested in natural gas for a couple of reasons. It's so discounted when you look in the market. And again, the demand is going to be way higher. So on that side, other commodities, as I said, I like copper. Again, part of the supply problem I liked. I could go to nickel. I don't like the manipulation of the market, so that's a longer subject. And gold and silver as replacements for US dollars. And the central banks have sort of agreed with me so far. It's interesting. The public isn't in the gold market yet. They haven't got there yet. And in fact, on the rise, a lot of public selling, and I think it was mainly, oh, thank God I got some money back. Thank.
Yeah, these assets, these commodities you mentioned, a lot of them have already reached new all-time highs. Do you still like copper? It reached $5 a pound last week, new historic highs. Gold breached historic highs this year. Oil, well, it's not at a high, but it was at $90 a barrel at some point earlier in the year, right? Are these valuations a bit lofty for you right now?
Yeah, maybe right now, but I'd be buying on dips. Obviously, we all know that prices go up and down. But if I think something's in a bull market, my message to myself is buy it on a dip. So I do, and I'd love to see a major correction because I think the long-term trend is absolutely in place. The demand side of those, because of the supply shortage, the price movement. Yeah, I have a high degree of confidence in that. And so, yes. And again, everybody's got, a dear friend of mine is a momentum trader. He loves this stuff. I don't have the personality for that and the emotional makeup. So I just sort of sit there and I buy on dips. Yeah.
I'm just thinking, look, I agree. Well, many people do agree with you that the erosion of our purchasing power is a big concern for the ordinary person. So I'm thinking, how do I beat inflation? I can invest in something like gold or oil if I want, if I could stomach the volatility of Brent crude, but wouldn't I just play it safe, put my money in treasuries, it's yielding what, 4.5% right now? It's pretty good.
I think it's a great point. One of the most straightforward things I ever thought that I still use is like 40 years ago. I thought, well, the money's got to go somewhere, when I looked. And so, yes, I like the Treasury short term though. And I know, by the way, there's some very sophisticated money managers, good track records. They're not worried the way I am. I mean, come on, look around. The trend is declining confidence in government. We've exited that long-term bull market in bonds. I think the debate is just what does it look like going forward? I also then look and say, keep in mind about, I don't know, picking a number, 140 countries in the world are giving me a pretty good indication of what it looks like when confidence goes. But we also, and then they'd say, well, yeah, but that's developing nations. I say, oh, no, actually, that was the UK when the pension crisis hit. Actually, that's Japan for several months now. Don't be so sure it doesn't hit here. And that was the repo crisis, September 16, 2019. So I'm just saying my goal is to protect myself, maybe offer some advice that people find valuable to protect themselves. Well, it's not in government bonds for me past, say, 3 years. I think I'm taking the further out I go, the higher risk I'm taking. And again, I know some very good analysts who don't mind getting a 10 or a 20. I think the geopolitical risk, I think the confidence problem that we have been seeing clearly. I mean, I don't know how anyone could debate the trend of declining confidence in government. I mean, it's so apparent.
What about real estate? I mean, when was the last time Vancouver had a real estate crash?
Problem with real estate is government.
Okay.
One of the things that's been apparent is, and again, whether it's the liabilities, whether it's the debt, whether it's different governments, both the Democrats and the Liberal NDP government in Canada both want to expand the size of government. Canada dramatically so. Well, they need money. They don't have money. They need money. So they're willing to borrow. I mean, Canada, I think, is as close as an MMT kind of modern monetary theory approach as you can see. Well, they're desperate for money. So where's the money? Well, the money is going to be in real estate, number one, stocks, and I would look at pension funds too.
So what are they going to do? They're going to tax real estate more?
They have in Canada, dramatically so. And just this latest move in Canada, and again, for everyone listening from the States, they might be shocked. We've changed our capital gains inclusion rate. So they've raised taxes on capital gains in a country that has declining capital investment per worker, dramatically so. For example, in the US, averages $28,000 is invested per worker. In Canada, it's $15,000. How does Canada compete? Oh, yeah, it doesn't. And that's what's called a 73-cent dollar.
Let's talk about Canada for the last part of our interview. I have many questions about Canada for you because you're an expert. You've invested here your whole life. You talked about how America is the leader in innovation.
Yes.
Well, yeah. So listen, my smartest friends, I'm not saying all of them, right? But, some of my smartest friends, first thing they do when they graduate from school is they go to the US. Right? How do we stop this brain drain?
Well, think about why they're going. First of all, there's not near the opportunity. Look at the size of the tech sector, for example, in the States. I mean, we're not even a drop in the bucket in Canada, so your opportunity is greater. I have a son who works in finance. Is the offers he gets from the States in finance, at this point in his life, he wants to stay in Canada for personal reasons. But he will move to the States because the offers better investment, better opportunities for your career and much higher pay. And he's getting paid in US dollars, not 73-cent dollars. So that's huge. I mean, there's so many fundamental problems in Canada right now from the tax makeup. And that's one thing we talked about President Trump before. His decreasing of the capital gains, I forget what it was, maybe 35, but it went to 21%. That was a huge boom for investment. Just huge. Here we're going the opposite way. As the old saying goes, if you tax something, you're about to get less of it. Well, think about Canada with this horrendous declining GDP per capita, capital investment per capita. And what do? They raise tax on capital. I mean, and that's one of several examples. The OECD, this is going back 2 years, said that Canada would be the worst performing country of the OECD in this decade. Then they threw the kicker. It'll be the worst performing in the 3 decades after. Now, again, that's a long-term projection. Lots to say and debate about that. The point is, though, is Canada is not performing. The only policy I think recognizable from the government for the economy is increased immigration, which has been dramatic. But then that had repercussions for housing, repercussions for other social infrastructure like healthcare. The healthcare system's different than the States. So, it's been very difficult, but there's very few. I don't know of anybody of sophistication who thinks things are going well in Canada economically. And the reason's straightforward, though. The priority for the NDP Liberal government, and again, if you're in the States, the NDP, although it's a debate how far left you can get, the Liberals are far further left than they were 10 years ago, and so is the NDP, but they have a coalition or an agreement to govern together. Well, the priority has been climate change. And climate change is anti-economic growth. So we have this major oil sector has been discouraged. So capital investment left Canada. There's so many other alternatives, but the US has been a beneficiary, seen it in mining. So the reason is really straightforward. When you say you're not welcome, people take you up on it. And that's why we have decline in capital investment. So, and I think even the most partisan would have a very difficult time suggesting that economic growth and prosperity have been a priority in this country.
What are the major industries leading any growth at all right now?
Oh, that's a trick question. The irony, though, seriously, is oil and gas is still incredibly important, despite the Liberals' constant verbal barrage against it because of climate change issues. But again, with the rise in oil prices, Canada just opened up a major pipeline going from Alberta oil sands down into the Pacific coast, so that opens up more markets. Again, if people aren't aware, Canadian oil got a terrific discount because we only had one customer. It was going to the States or it wasn't going anywhere. So it's going to be interesting that oil is going to help out. Past that, it gets different. Fertilizer can be good, that kind of thing, but that's an oil, natural gas related product, potash too. It's hard to think because real estate was, in many, many areas in the country, the leading industry, except for now we have a downturn in real estate due to higher rates, due to, again, they've changed some of the tax laws regarding it. So, real estate is no longer the shining star.
Do you think real estate is in a bubble right now?
The challenge is, here's the one thing. If you're bringing in, Canada brought in, well, think about this if you're in the U.S. If the U.S. brought in 24 million people in 2 years, that would be a boom to some areas in real estate. Well, Canada brought in, we're going to be well over 2 million people in about 20 months. In the first 4 months, this is after the government looked at the poll results and they found that Canadians didn't like the housing problem and they understood the housing problem. That's a key. Like I can talk to GDP per capita or maybe what the money supplies are doing and people maybe not as familiar. They sure got when you bring in that many people, over 2 million in 2 years, they got to live somewhere. And there wasn't the place to live. So we've had a real problem with our housing. But so that performs sort of a bottom line demand for real estate in Canada. And again, the supply isn't even close to meeting it. It's not even in the ballpark. This housing crisis is going to be with us for a long time. And I've been saying for years, you want to have social problems, make it a housing problem, make it a food problem, and make it an energy problem.
Yeah, they're changing zoning laws in BC that make it easier to build multifamily units and condos. You can actually build a second home in your backyard if you want. So I've heard the opinion that perhaps single unit homes will actually rise in value compared to everything else.
Yeah, that certainly will support the value, but it's really interesting. There's so many regulations around that when the city of Victoria was first off the mark to do that, they'd allow you to sort of duplex your home, as many as 4 homes on that site, if you're close to what we call our transit, our mass transit in Vancouver. But let's say 2 homes, nobody took them up on it, 0. Because the developers don't know the ultimate cost. And I can get quite technical on that, but they don't know the ultimate cost. You've got high interest rates with people sitting on the sideline saying, I'm not buying till rates go down. So I think the housing market is certainly vulnerable to a significant correction short term. Longer term, you still got to put people somewhere.
Finally, last question, the immigration aspect you talked about. So actually, 100, nearly 100% of Canada's population growth over the last year has been from immigration. Now, what does this mean for the future of the country? What does this mean for the economy?
And it's a sophisticated question, by the way. There's so many aspects to it. And this is where, on a personal level, I've been appalled with the anti-Semitism in the country. All of that is imported. That's an immigrant population. Maybe they came in on temporary visas too, and they're non-permanent residents, but they're in the country. I don't think there's been anything socially that's ever surprised me as much. If you had asked me on October 6th about it, no, not Canadians. No way, not possible. It's been appalling, as it has been, in other Western countries. But I've been shocked. Well, that's an immigration issue. I was thinking this the other day, so forgive me. It wasn't my deepest thought yet. It may be there. As I said, if Canada wants to look at the future, say 5 years out, look at Europe. Look at the backlash now. I thought it was really interesting when the UK calls an election, the prime minister first thing is sort of boasting how they've got immigration down. You got Geert Wilders, obviously, forming, a lot of reasons for that, but immigration was a big part of him getting elected in the Netherlands. Marie Le Pen, rises in population. You see it in the States. I believe the last poll I saw, it's the number one issue was the illegal immigration coming across the border. It actually, for the first time, outstripped cost of living. This is a really big, important, hot button issue. And I think they're walking right into it. Again, the Liberal government has been forced to acknowledge, and here's a beauty for, when Americans start feeling bad about themselves, they should hear this. They didn't even know how many people were getting temporary visas. They literally didn't know the number, and it had exploded. And they didn't even know how many. So they've been finally forced to address it because the polls said you're going to get obliterated in the next election if you don't. And so now they're going to put on restrictions starting next year on temporary, but their immigration targets are still there, still unabsorbable to the social infrastructure.
Here's the thing, though, because like I mentioned, there's like a 97% of the growth of the population is from immigration. So if they put restrictions on foreigners coming in, if they limit immigration in any way, we're looking at potentially lower growth.
Yeah,
That's also
absolutely.
unpopular.
And standing right beside that is, of course, the aging population. I think there's
Yeah.
7.6 million 65 and over. So it's not a debate about immigration. I think really in Canadians' hearts, it's a debate about how the government didn't handle it. How can you set new targets in October 2020 and not make one allowance for housing or healthcare or education? And the TD Bank, I think it was, forgive me if it's not that bank, but we only have 6 major banks in Canada. So one of the banks, I think it was TD, put out a report in August saying all the positives of immigrations get eroded if you don't have the social infrastructure to absorb. I think we're living that. So it wasn't a debate about inflation. About immigration, wasn't a debate about the need for immigration. It's a debate about the government didn't prepare for it. Their targets were way above what we could provide in housing, healthcare, and education.
Well, Michael, I enjoyed this conversation very much. Thank you for spending time with us. Tell us where we can find your work. Well, tell us about your show as well. What do you aim to cover there? Yeah.
I've been doing MoneyTalks for 1,000 years, for a long time. And again, it's sort of economics. It's more my interest in warning people of some of the things we've talked about economics, getting top guests. And I could aspire to get as good guests as you've been getting on, but top guests and people I really appreciate giving our time, talking about the political implications of some of this. Especially my thing is, and you can imagine this from an investment background, whether you like gold and I don't, or you like NVIDIA at this price and I don't, that's not an emotional difference. I don't sit there and going, well, you're an idiot. I think you've got emotional problems when you attach that. But what we're watching here is that I want people to know the implications of the choices your government's making. So if we do, and the government absolutely works hard at not expressing that to you. So when they announce new immigration targets, they don't announce, oh yes, and that'll have real pressure on housing and they never tell you, as Thomas Sowell famously said, there's just policy trade-offs. So what are the trade-offs? And my goal on the show is to explain trade-offs, especially because, appreciate this, we're in a crisis time, in my opinion. My opinion, we're in a monetary crisis that's going to change the monetary system, at the end of the decade, change the political system. There's going to be tremendous social unrest. So the stakes have never been higher. Have never been higher. So my goal is to explain what choices you're making. So again, seriously, if climate change is your thing, great. Understand what those policies do to economic growth and your standard of living and the cost, that kind of thing. If it's economics first, well, again, but in Canada, we have not been prioritizing economics or finance, and we're living the results, but the results are about to get more serious.
If you were my age again, so early 30s, how would you invest differently? Would you do anything differently with your career?
Well, I think things have changed dramatically. I mean, not obviously they have. I mean, that was 40 years ago. I was doing the math very quickly in my head, of that. I think verbal skills are getting more important because
Okay.
again, AI is going to, if somebody was illiterate in math, it's going unless you're programming or working directly. I think you're going to be bailed out by AI in a lot of these different subjects. So I think entrepreneurial skills are key. And again, are they being taught in school? Not at all. But entrepreneurial skills, because the flexibility, look at your career already, though. The flexibility you've shown within your career, we're not going to all work for the same person. It's not that old 40-year, it's not particularly insightful. People understand this. I work for the same company for 68 years, not happening. So it's your skill set. And I think it's a constant adjustment of your skill set. And the last thing I'd say is, read good people. That's why I'm impressed with some of the guests you've had. Those people are worth listening to. Read their stuff. I'm still reading Howard Marks, Oaktree Capital and his memos. There's stuff I get. Are you kidding? 40 years later, I'm still getting stuff out of them. Listen to Stanley Druckenmiller, Miller. I just think it's an ongoing learning thing for sure.
Well, Michael Campbell is a good guest, so we should listen to him, and we should listen to him on the Money Talks show. So we'll put the link down below. Thank you again, Michael. Thank you for coming in.
Been an absolute pleasure. Thanks.
We can talk for hours, but we don't have hours today. We'll speak again next time. We'll bring you in again. See you next time, and thank you for watching. Don't forget to follow Michael in the links down below and subscribe.